This is an Uncover Japan company research report on Mamymart Holdings, ticker 9823. Mamymart is a Saitama-based supermarket operator whose fresh food-led format is producing growth that is unusual for a regional grocer. In the next few minutes, we will look at the operating model, the financial evidence, the valuation, and the risks that could change the story. The starting snapshot is striking. Mamymart grew operating revenue by 20.5% in fiscal 2025, while its trailing PE was around 9.8 times. Return on equity was 12.4%, and the equity ratio was 48.8%. That combination is the reason the company deserves a closer look, but it does not remove the risks of a thin-margin retailer. Mamymart's central product is not a software platform or a patented device. It is a store format called Seisen Ichiba Top, or Fresh Market Top. The format makes produce, seafood, and prepared meals the visual and commercial center of the shop. The aim is to pull customers in with freshness, range, and everyday low pricing, then earn a return through higher traffic and fuller baskets. The key operating evidence is same-store sales. In the first half of fiscal 2026, same-store sales rose 6.6%, with both customer count and average spend contributing. That matters because a grocer can grow sales through price inflation alone. Mamymart's result points to actual traffic growth as well, which is more consistent with the format doing what management intends. The financial record confirms that the store story has translated into growth. Operating revenue increased from 136.7 billion yen in fiscal 2021 to 193.7 billion yen in fiscal 2025, a 5-year compound rate of 9.1%. The acceleration is important. Fiscal 2025 revenue was up 20.5%, while net income reached a record 5.25 billion yen. The same data also shows the trade-off. Operating profit reached a record 6.74 billion yen, but the operating margin fell from 4.4% to 3.5% over the 5-year period. The report attributes this to deliberate, everyday low pricing and front-loaded spending on new and converted stores. Investors need to judge whether the sales base ultimately delivers enough operating leverage to recover margin. Fresh food is perishable and labor-intensive, so simply displaying it well is not enough. Mamymart owns more of the value chain than a typical regional grocer. Its Seiyu Foods subsidiary makes prepared meals in-house. Seafood processing is being standardized, and centralized merchandising can move successful ranges across the estate. The new Matsubushi Logistics Hub is designed to support roughly 40 additional stores. The balance sheet is a key support for the expansion strategy. In fiscal 2025, the equity ratio was 48.8% and return on equity was 12.4%. Tangible fixed assets have risen as stores and infrastructure are built out, but the report's model keeps the equity ratio close to 48% through fiscal 2028. That suggests growth is being funded without an aggressive increase in financial risk. The growth runway has several visible pieces. At March 2026, Mamymart had 90 stores, including 40 top stores, 15 Mami Plus stores, and 35 legacy Mamymart stores. Remaining conversions, around 9 to 10 openings a year, and the logistics capacity to support more stores underpin management's ambition for roughly 300 billion yen of revenue. Valuation is the attraction. Mamymart traded at around 9.8 times trailing earnings versus a 5-year average near 8.6 times, and a listed supermarket peer median around 13 times. The discount is not automatically an error. Peers have higher margins, and Mamymart carries regional concentration and liquidity risk. But the gap is notable given the recent sales trajectory. The report's scenario work is illustrative rather than a price target. Its fiscal 2028 bear case is 752 yen, the base case is 1,618 yen, and the bull case is 2,801 yen. Those outcomes depend on same-store growth, new store execution, margin recovery, and the valuation multiple. The widespread is a reminder that a low PE alone does not make an outcome certain. To sum up, Mamymart is a differentiated regional grocer whose fresh food top format, in-house processing, and Saitama density have created unusual organic growth. The investment case depends on traffic staying strong and the margin recovering as expansion matures. The risks are specific: wage and utility inflation, hard discounter competition, regional concentration, and a tightly held illiquid share register. This is research, not investment advice. For a much deeper look, Visit the free deep dives at uncoveredjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or a recommendation to buy or sell any security. Always do your own research.